Back with you here on the Market Day Report. I'm Marlon Bowling with you on a Monday as we get things rocking and rolling on your ag futures trade. Let's go take a look at our grain trade first. And the corn market has had a little bit of pressure in the early going here. If we go to the big board, we're still seeing the pressure continue. December corn currently down 5 3/4. We're at 346.5 now. That's down 6. And now that's a brand new low for the day. March down 6 1/4 at 356. Also on a new low for the day. That's now almost 8 cents off of our earlier high. On the soybean trade right now, here we have November up 3 3/4 at 986 3/4 on the day. The January contract now 4 1/4 higher at 996.5, even though that has fallen off of its high now by a good, well, that would be about 13-14 cents. Let's take a look at the wheat trade in Chicago. We have December now currently trading 10 1/4 lower. Wow, a lot of pressure in Chicago wheat now. Last trade 404 1/4. That's on the low of the day. And in the Kansas City market here we have the December currently down 8 at 413.5. And Minneapolis, we have December there down a penny at 528. Let's go find out what's going on the trading floor. Let's bring in OliverSloup of iiTrader in Chicago. And Oliver, what are you hearing on the floor? What's making the markets go south here?
Yeah, just seeing some additional consolidation lower pretty much across the board. Soybeans still positive, but obviously well off the early morning highs where we saw that November contract test that psychologically significant level of $10. And now the 979 1/4 level is going to be pivotal over the next couple sessions. That's a 200-day moving average. But if you're in the November contract, you're going to want to know that this contract is about to go off the board, and you're going to want to roll out to the January futures. So I think you're probably seeing a little bit of repositioning as traders start to do that throughout the week.
How much of this is harvest pressure, do you think?
I think there's a fair amount of that. We've had a nice run really over the past week, 2 weeks. So I think we're just seeing some consolidation, which isn't necessarily a bad thing for corn. I think it's very healthy. We're looking at 344 3/4 to 346.5 to step in and add to a long position. That's a 20-day moving average, Fibonacci retracement, and a trend line going back for the past couple months, which has marked higher lows. And hopefully we can go make higher highs if we break out above that 360 level. 356 is the first line in the sand. That's the 100-day moving average. We haven't gotten a conviction close above the 100-day since June 24th. So if we're able to do that, we might see some funds start to cover some of their net short position here.
I was checking a little bit ago, and the dollar had been lower on the day. And a little bit ago, the dollar seemed like it had turned a little higher. Right now, we're up 50 points at 98.740 on December futures. Is that having anything to do with this?
I wouldn't buy too much into that. It's a relatively light move for the U.S. dollar, but it's certainly going to be something that you want to keep on your radar going forward as we get closer to that potential December rate hike decision, because that will have a massive effect on the dollar and therefore have a big effect on commodities in general, including all the grains.
So, Oliver, what do you guys expect to see when it comes to harvest progress that'll be released tonight by USDA for the corn and soybeans?
I don't have the numbers right in front of me. I'm trying to, I think 65-70% for corn and about 85% for soybeans, basically in line with what we've seen on the 5-year average. So not really expecting any big surprises or any surprises that will have the potential to move the market at least. Sounds
like maybe the northern half of the Corn Belt might have some problems from oncoming frontal systems that will be coming through the balance of this week. Southern half should be wide open from what we understand, so they'll probably make pretty good progress. Oliver, I want to bring you back here in a moment and talk with you about this livestock trade. Kind of lit a fire under that trade today, and we'll find out why when we come back with more with OliverSloup right after this. Well, we're back with you and back with OliverSloup. He is with iiTrader in Chicago. We're here to talk about the markets, this time on the livestock side. Wow, what a reaction this morning here, Oliver, as you look at the live cattle trade, feeder cattle trade, even the lean hogs, everything off to the races today. Let's take a look at our latest prices. Right now we have December live cattle up $1.94. They're trading at $103.82 per hundredweight. Now that is about 90 cents off our earlier low. So at one point, they were actually getting, within about 20 cents of going limit up. The February contract up $1.42 right now at 104.22. And on the feeder cattle trade, here you have November trading $2.20 higher at 121.90. January $2.12 higher at 117.60, make it $2.10 higher now. and just got an update on the wire about some cash cattle sales that were made over the weekend. And it looks like they finally did bump them up, and that might be supportive here to the futures trade today. It looks like the live basis cash sales over the weekend were bringing $100 to $102 per hundredweight. The market was said to be a fairly moderately large amount. So what do you make of that action that you're seeing here in the futures? Is this something where it's off to the races and it's going to run out of here, or what?
That would be nice to see. We've still got a lot of work to do. You know, if you look at a longer-term chart, we are at the very bottom of the range of really about a 10-year trading range. So we do want to see some more confirmation. I think Friday's cattle on feed and cold storage report has definitely played a hand into some buyers stepping in. I want to see some additional buying come in. I think a lot of this is short covering, which isn't such a bad thing. A lot of longer term rallies do start with short covering, but we're going to need to get out above some technical levels to encourage more buyers to step into the market. For the December live cattle, we really want to get back out above that 105, 105.70 level. It's a 50-day moving average, previous support, and a Fibonacci retracement level. I think for the bulls to maintain hope, they're going to at least want to hold ground above that key psychological 100 level.
And in case our viewers at home or our listeners missed it, when it comes to the cattle on feed numbers that came out on Friday, it was considered to be very bullish on the, at least on the on feed number and the placements number especially. Placements only 98% of a year ago. Trade was looking for about 104%. So that was a bit of a surprise there. However, the cold storage numbers were said to be very bearish on the beef and the overall red meat categories there, but the trade seems to be ignoring it today.
Yeah, and the old saying around here is low prices cure low prices. You know, at some point, a lot of the sellers have already stepped in, and they're finding some good value down here, and that's what we're trying to pick out. You know, I've been talking a long time on your program about price is what you pay, value is what you get, and I do think there is potential live cattle, feeder cattle, and lean hogs to the upside, but it's about being patient because the market can remain irrational a lot longer than you can stay solvent. So it's all about being a risk manager, not necessarily a trader day by day.
How about the lean hog trade? They're getting further away from that $40 mark now, up $1.60 on December lean hogs. Last trade, $43.45. Only 30 cents off our high of the day right now. I know you had said in the past you were looking for 2 or 3 trades higher. Looks like we've got that. Now what?
Yeah, well, I want to see 2 or 3 closes above 45, and then I'll start getting a little bit more excited. We've had a lot of our clients kind of stepping in on both sides of the trade, but I'm not going to be jumping up and down just yet. I want to see some additional confirmation of maybe a near-term bottom coming in, and I think to see that you want to see a couple consecutive closes above that 45 handle, which was a big previous support level for us, but it is very encouraging to see us a little bit further away from that 40 handle, as you had mentioned.
Oliver, good to visit with you once again. As always, OliverSloup is with iiTrader in Chicago, a great resource for market information. And so far, livestock hanging right in there, Christina, with very good strength so far, backing off a little bit to take their breather, I guess, if you will, but still strong.
All right, thank you so much. Markets editor Marlon Bowling.